everyone, it's MJ here, and today I will talk about a topic that one of my investors and their Will Rise asked me to talk about, and it's concerning opening positions. How do I kind of choose a price, which position to take, and so on and so forth. So it's a very interesting question. I think the way I will divide this video is into three ways. So first I will talk to you about Porsche and my history with that stock, and actually will give a lot of background into my thinking and my approach. The second will be about investing in Lloyd's, so the financials with a UK focus. And the third would be talking about kind of 16 years and 4 months of research kind of thing. So let's jump right in. So the first one, Porsche. So how did I enter that stock? And that's actually how I started on eToro. Basically, I've been looking at Porsche, most of my career. I had one, I loved the brand, and I wanted to buy the stock at 55, basically for the last 18 months or so. I thought that the stock is worth around 70. So I thought, okay, well, if I buy it at 55, that's going to give me like a nice 30% return, which I think is amazing. You get less than 0.5% in a bank, if not a negative rate. So I was willing to wait for Porsche to go to 55 in the next few years, buy it, and then get 30% return. If I do it within 3 years, I'm kind of happy. 10% return without looking at the stock. Pretty easy money. So that's kind of tells you quite a bit about how I enter stocks and how I choose it. So I'm more of a fundamentalist, so I look at market caps, price to earning ratios, PEs, price to book, PBs, and leverage ratios, and how the industry is trading versus a particular stock. So I like fundamentals because I think if something is worth 70, it may be 50, in which case I'm interested to buy, maybe 90, in which case I may be interested to sell. But I do believe that there's a fundamental value of each stock, which for Porsche, for me, it's about 70. So a quick history on eToro with that stock. I actually bought it at 50 for the first time in April. That was going down quite drastically, so all my drawdown is associated with this stock going down. Some people don't catch the falling knife, so it's risky, if you will. Some people will say that to buy a stock that's falling because it's against the trend and So, but as a fundamentalist, I was happy to buy at 50. The same day I bought at 146. I think the same or next day I bought at 46, then at 42. And a few weeks later, I think 3 weeks later, I managed to pick it up at 29.99, and I picked up a decent amount. Some of it I closed at 66% gain in 1.5 months, so quite happy about that. And my average price was around 38, and now Porsche is trading at 50, so that's about like a 35% gain, which is nice, right? I had an objective of making 30%. COVID allowed me to already take profit at 66% with the average profit of about 35%. So for me as a fundamentalist, that was the most important thing. I will talk about entering position and technical analysis during the second example. So Porsche was kind of an easy one, but if you're a passive trader, passive investor rather, not a trader, that could be something that can interest you. Obviously not everyone has a few year time horizon, but it's very important that to enter at the right price. So I will talk about that a little bit more when I wrap up and in point number 3 as well. So in terms of Investec and Lloyd's, how I enter a similar way. So here is more COVID related. So Lloyd's, again, is a stock that I know very well. I studied in the UK. I've looked at the stock. I have an account with Lloyd's. And I remember 2008, 2009, where the government was helping the banks, across the world, but in the UK, RBS and Lloyd's were big beneficiary. Lloyd's, I think he was second after RBS. And I know that the price that the government was buying. I can't remember the top of my head, but I think it was around 35. And I knew that the stock is worth around 70. So I think, kind of the range of 35 to 70 is interesting for me. And during COVID, I started buying at 36. So that's the first position I opened. Did more or less similar. It was a little bit later in the COVID because initially I just wanted to buy Porsche, but when I saw Lloyd's at that price, I was like, okay, I'm gonna add some more funds. Hence I diluted. You would see 20% up in March, April instead of 5-6% up, and that's because I mainly diluted myself hugely, like I think 6 times almost now. But I think even in March, April it was 3-4 times. So obviously my return went down. But my absolute return in terms of dollars, it went up because I thought this opportunity is just too good to miss. So again, started at 36, picked it up lower and lower, around 30. I was like, this is a super deal. And then I managed to pick it up at 27.5, which is just amazing because it's almost 10% up. If it goes to 30, which I think 30 is an incredibly good level. Everything below 30 is just a steal, and I recommended that stock to a lot of my friends and wealthy individuals. So again, I think the stock will go to 70. It may take 3 years to go there. I don't really care that much. I know it will steadily go. I think it has to go to 36 in the next month or two, 39, 42 next 2 months down the road. So that a handsome 40% return already, which I told you 50% is kind of my goal. So I think it will obviously double to closer to 70, but I cannot tell you exactly the time frame. But so that's how I answer. I know I kind of have a fundamental price for the stock, and then I have a kind of entry point where I'm interested in buying. And then I look at the stock analysis, stochastic, RSI, and different technical analysis tool. But just to back up my position, just to choose the entry point, it's more like a fundamental view on that one. Investec, obviously much more volatile stock than the aforementioned two, Porsche and Lloyd. So Investec is more risk associated to kind of exposure to South Africa, and not necessarily more risk from my standpoint in the sense that it's extremely well diversified business. It's getting a lot of metrics right, consumer lending, and everything's growing over the last 5 years. Cash positions and wealth management business and so on. Big exposure to the UK. So I actually like the business a lot. It's trading now at 150 below that, which is just incredible. My fundamental value is around 437, 441. So kind of triple that, and obviously it can go more because it used to trade about 700 or so. So I think this is an absolute steal. The price here is behaving. I started picking it up at 160 was the highest I picked it up. Most of the stock I picked up at 142 and 137. My average is around 143, 144. Which is a great, incredible level. So every time it goes 137, I'm interested. And at the moment there is a big resistance around 169. So once it crosses that, it will just skyrocket. So I gave you pretty precise numbers. And actually, Ender Will Rise used quite a bit of that, kind of following what I advised, and then trading, including leverage. So he made some handsome return, and well done to him. I actually. People ask me, are you not you give your trades away for free? I mean, I'm happy. People who follow me and if they can make money based on that, I'm happy. If they copy, and then they ended up copying me as well as a bigger position, I think, in his portfolio, which is a great honor. So thank you for that. And the portfolio is behaving very, very well. So it's a good diversification with incredibly good risk-reward ratio here. So on the third point, I told you it's kind of 16 years, 4 months. So what I mean by that is I told you I spent 16 years. I have spent the last 16 years in the financial services industry. So I've done a lot of research on numerous stocks. So kind of some of my favorites are in my brain in terms of how where they should be, where they should trade at. So COVID provided me with wonderful opportunity at picking up some of the stocks I like the best. Although in America, especially, I wanted to pick up some Goldman Sachs and maybe Blackstone, but it's been trading at a too high multiple, so it didn't enter my criteria. But I'd love to have those stock. Same with Ferrari. I'd love to have Ferrari, but it's too expensive. So I think the point here is you can buy a terrible company and a terrible stock at a really good price and maybe make a fortune, and you can buy a wonderful company that the price is too high and lose a lot of money. So if you look at the, I think Amazon, Tesla, Netflix, obviously there's going to be a lot of discussion if you want to talk about those stocks. But if you look at the valuations, some of it is incredible. And for me as a long-term investor and fundamental focused, value focused, not necessarily the best. Although I like Microsoft, so there are things that I buy in terms of growth and with big valuations. But anyway, so in the 4 months, so the prices, I've been looking at these stocks that I've mentioned every day, probably about 16 hours a day for the last 4 months. So I don't even need to open, charts and technical analysis, because I just know where the support and resistance level are by heart. So it's pretty easy for me to pick it up where I want, and I know where I want to exit. So I think that's incredibly important. So here we go. I think I've shared quite a lot of information. Please share your feedback. Tell me about other videos that you would like me to cover. And I'm sending all my best regards from Luxembourg, especially to my loyal, now 41 copiers. So take care, stay safe, and make some money as we are leaving the COVID-19 period. Take care, guys. All the best.